Ladies and gentlemen, good day and welcome to the Q4 and FY25 earnings conference call of Kamat Hotels India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then zero on your touchtone phone. I now hand the conference over to Ms. Nupur Jain Kunia from Valorem Advisors. Thank you and over to you, ma'am.
Thank you. Good evening, everyone, and a very warm welcome to you all. My name is Nupur Jain Kunia from Valorem Advisors. We represent the investor relations of Kamat Hotels India Limited. On behalf of the company and Valorem Advisors, I would like to thank you all for participating in the company's earnings conference call for the fourth quarter and for the financial year 2025. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and the information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Let me now introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Vishal Vittal Kamat, Executive Director, and Ms. Smita Nanda, Chief Financial Officer of the company. Without any further delay, I request Mr. Vishal Vittal Kamat to start with his opening remarks. Thank you and over to you, sir.
Thank you very much, Nupur. Namaskar, everyone. I am thankful to all who are present here today and to discuss the Q4 FY25 and the financial year-end results of the year 2025. The results, along with a comprehensive presentation, has already been made available for all to view on the stock exchange. The results, along with the presentation, has also been shared for you all to look at based on the assumption that many of you all are here. So, thank you again for being here. Despite a relatively subdued first half, I am pleased to share that we had a much better second half, resulting in an overall good performance for the year. Looking ahead, the year looks very promising for us. We have some interesting things happening which we will share going forward along with the Q&A session. In terms of operations, we recorded a 9% growth on our ARR, reaching approximately 6,500. Our goal to increase the ARR to 7,500 by FY26 also is in place based on the new hotel openings and other aspects. I am also pleased to report that we've been able to achieve a occupancy percentage on the group level of 65% for the quarter. Hotel to hotel, it varies, so this has been the thing. As part of our strategic expansion, we have opened the Chandigarh Orchid Hotel, which I'm very pleased to inform all that we did a soft opening in the month of April, mid-April, and we will be having the formal opening already will happen in the first week of May. It is a 122-room luxurious property. It is the first property when you leave Chandigarh Airport coming towards Zirakpur. So, strategic location with a very beautiful banqueting space. We have multiple banquets. We have South of India's restaurant, which is our signature restaurant from Mumbai. We have the Boulevard Coffee Shop, which is a massive all-day dining. And considering how Chandigarh is, we expect that it will do really well. We have a pool deck and a pool restaurant, small restaurant deck and thing at the pool, which is on the 9th floor. And that we also have a fantastic, beautiful lobby lounge. So it is a F&B centric hotel, and we are very proud that it has shaped up very well. Apart from this, also we have signed 2 new properties in Rishikesh, which is a 54 rooms. Which is scheduled to open on 1st of July, and we also have signed a 153-room hotel in Kutch, Mandvi, which is set to open by December 27. It might be a little before that also, so I'm hoping for that. This year has been particularly significant, especially considering our various other. Hyderabad will open shortly. Bhavnagar was delayed due to the fire that happened in Rajkot, and that stopped a lot of the hotel work and even other works, including malls and other aspects which I think whole Gujarat unfortunately suffered at the hands of the tragedy. But Bhavnagar is also on track now, now with the things government giving the clearances, and that will open this year, along with Dehradun, which is got delayed, is also there, and Gwalior. So our expansion, which is going on in this year, we're very happy to see that Chandigarh has been there, Hyderabad will be there, Rishikesh will be there, Bhavnagar will be there, Dehradun and Gwalior. So all these will be added to our Kamat family, Orchid Hotels and Era Hotels. Further, we also have some improvements happening which will further enhance the EBITDA and the sales at our things, which is an ongoing process, as already explained in our prior, which is Orchid Pune. The work is going on over there, which will upscale the hotel and take it to the next level. Operation efficiency remains a key focus. We have been implementing various tools and technologies, energy consumption devices, streamlining labor, looking at AI and bots to help us with our various processes, and we want to take our EBITDA, we want to take our debt down, which we've been consistently doing. We were at 150, 140, which has come down to around 100 and 105 for this year right now. And as already told in the past, we are in the same direction, rapidly reducing it further. In fact, by this year, anyway, that's further later. So that's also there. So use of technology has been our paramount. We've been using a lot of tools to further bring the efficiency in terms of our finance, accounts, operations, and our compliances. So that's also something which will reap us very rich dividends in the time to come. So I'm once again sincerely grateful to all you investors and people who have been our stakeholders, well-wishers, for having that continued trust in us and being part of this call. Thank you very much, and I look forward to the Q&A session after Smita ji finishes her address. Thank you. Namaskar.
Thank you, sir. Namaskar and good evening, everyone. Let me briefly touch upon the key performance highlights for the quarter ending 31st March 2025. The consolidated revenue for Q4FY25 stood at INR 93 crore, representing the growth of approximately 9.5% on year-on-year basis. EBITDA for the quarter was 25 crore, a growth of around 6.4% year-on-year basis. With the EBITDA margin 26.81, the profit after tax for Q4FY25 stood at INR 11 crore, showing the significant increase of 423% compared to INR 2 crore in Q4FY24, that is last year. For the full financial year FY25, the consolidated revenue stood at INR 363 crore, registering the growth of 19.1% on year-on-year basis. Total EBITDA for the year was INR 105 crore, up by 15.2% year-on-year basis, with the EBITDA margin of 28.9%. The profit after tax for the year stood at INR 47 crore, which is reflecting 4% growth year-on-year basis, with the PAT margin for the period ending at 12.86%. With this, I conclude my remarks and request the moderator to open the floor for the question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Guru Darshan from Kitara Capital. Please go ahead.
Yes, thank you for the opportunity. Sir, can you please share an update on the Mahodari Palace JDA? How much capacity and what kind of revenue can we expect, and what could the ROC look like from this property? And second, since we're entering the new year with higher mix of leased hotels, what kind of EBITDA margin in terms of percentage can we expect this year? Thank you.
Thank you very much. So basically, we had entered into a JV. That JV has not progressed ahead. So we basically are looking at someone else in terms of a strategic partner from that perspective for the venture. Okay. That said, certain things are already moving ahead because we already have a beautiful plan in place, and there have been various people who have shown interest in terms of partnering with us for the overall project. So once the financial parts of those are shared with, once they're finalized, then we'll be in a better position to tell you what would be the certain aspects, because it will be based on what is the final outcome of the JV. That said, it's a property which is almost 200 rooms. It will be 180 plus minus rather, so 180 plus minus around maybe 180, 185, 180 room property at Puri. And Puri is the kind of product that this is a very premium destination, what we can see. And the kind of market that is there have become in a few luxury players, like example, Taj is there, and there have been some other standalones also who have enhanced themselves. And the ARR in that market has driven upwards. So we are also very buoyant to see that this would be a very lucrative ARR on the higher side kind of situation. And considering that Puri especially is already a popular MICE destination, so we looking at this being quite fruitful in the time to come. So this said, this is basically the outlook of Puri. And what was the other thing?
The second question is, with a higher mix of leased hotels, what kind of EBITDA margin you're expecting? It would be still 35% or less than 35%? So just wanted to understand from you on that.
Yeah. So it's a very nice question. Basically, it will definitely come down, but it will come down slowly, because what's happening is that on one hand we have our own properties which are going to go up. Like example, the Orchid Pune, once its renovation and its upgradation completes, we find that will give us a huge jump in our sales as we expect. And apart from this movement in terms of our own, we're also going in for leasing and revenue share model properties. Now the thing is that on an average, these revenue share properties, they give you a net return anywhere between 10 to 15% based on whatever is the overall terms. So for example, if I go by industry thumb rule, let's just for hypothetics say that you have a thumb rule of say 35%. Okay, so that means on 35%, if my leasing is coming to around 20%, then I will be left with 15%. If my leasing or revenue share comes to around say 25%, then I'll be left with 10%. So it depends on what is so now if the GOP is at 40%, and even if my revenue or leasing percentage is coming to 25%, still I'm left with a 15% margin. So the thing is that it will come down, but come down slowly in a tapered manner. The reason being that the assets which we own, like the Orchid Mumbai, like Pune Orchid and others which are there, are basically contributing heavier than the newer properties coming in. Rishikesh, while it's a property we expect to do around, say 20,000, 18,000, it will do because that's the kind of market it is. Still, it's only a 58-room hotel. So the kind of revenue impact and the EBITDA impact that will have is smaller in its footprint. So while there will be a tapering down, it will be on a slower rate, but it will come down. And as we are opening up more and more, and in some cases, there would not be an impact. Like example, in the case of Mandvi, it's a beautiful 153-room location. Now this 153 is a management contract. So because it's a management contract, it will add to our fees. So that is where the plus point is for our management side also, that some of our hotels which we are signing up are in the management space also. So we are very choosy with the kind of management space we are taking. First and foremostly, more important than a beautiful property are very good owners. Because in a management hotel, we want like-minded owners. And once the owner is like-minded, of course, the property is going to do well. We want people who are, having hospitality in their thought, not that just they want to sweat an asset only. It has to be that they want to create something and then support that. So maintenance, upkeep, marketing, because many times owners, they tie up with the brand and then they say अरे इतना मेरा खर्चा हुआ, अभी मेरे को marketing पे खर्चा नहीं करना है. Now for something as small as 50,000 your asset is worth 50 crores, but then for 50,000 per month seems to be the pinch. So that's where we look at and see the owner whether they are really driven in that sense, that what is the aspiration, money and name. So that's how basically this will also, as these properties start coming in, will help our fee income go up.
Understood. Thank you so much.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Aman Soni from Invest Analytics Advisory. Please go ahead.
Hi, am I audible?
Yes, sir. Please tell us, sir.
Congrats for meeting the guidance, sir. My question is on next year outlook. While in your opening remarks, you mentioned about the positive tailwinds that are there in the industry, and we are also going for new hotel openings as well. So my question is, why are we looking for such a conservative outlook? Like we did around 360 CR in FY25, and in PPT you have mentioned 400 CR for next year. So why this slower growth we are targeting for FY26? That is one. And secondly, on the margin guidance, you mentioned to the earlier participant about fall in the margins, and in this quarter as well, there is a dip in the margins. While in last quarter you talked about 35% to be a sustained benchmark number for the upcoming quarters. So why there is a change in stance for the EBITDA margins, sir? So these are my two questions, sir. Thank you very much.
Thank you very much. That's a very good question you have asked. See, I'd rather be sincere and cautious and practical than to just be exuberant and just say something and then not meet that. So the reason that we have a conservative approach is because hotels, when they start from day one, the cash register doesn't ring. Now let's take the case of Chandigarh. Chandigarh has opened on the 12th of April on a soft manner. But the occupancy on certain days has been 90%, on certain days has been 5%, because it takes time for the market to get stable, for you to get listed everywhere. So a simple thing like a listing on, even though we have strong tie-up partnerships with a booking.com and a Make My Trip, even then, for the algorithm to take shape, for when people Google, then they'll see, "Arey, Orchid Hotel khula hai," then they'll click, then that becomes popular. It takes time for your everything to come up. So if today I look at the various segments, one of the segments it takes time is basically OTA, like I explained to you, online. Another would be our own sales team. Some of them are able to get business on books in advance. Some of them cannot. So what happens is it all takes us step by step. We have tie-up with airlines. Airlines people also, by the time, just because we've opened, they'll suddenly not shift. They also have a process. So various of these MNCs who are going to stay with us, they have their audit process going on where they check for their own internal compliances, whatever they need. So this all takes a time. And that's basically how there's a build-up on the books. So because of this build-up on the books, we will not capture necessarily the full revenue of the year, considering we are in the month of now almost May. Okay, as good as we are in May. So we have basically kept a guidance based on a certain thing, that this is what is the worst I could do, not the best I can do. And that's basically why our guidance, you can say, is conservative. And again, now considering also that the current scenario of this tariffs, the current scenario of global outlook, even this tragedy which has happened in Kashmir, all these things we have to factor in so that we don't, put ourselves ahead. So that is basically why we've been conservative. God willing, everything will be fine. We have a strong, able leadership at the center. We have a very good now direction at least happening in our various states, in terms of each state wanting to, regardless of which political party they are, most of the CMs are very pro-business. So, that's another good thing. There's an internal competition within India. Every state is also competing amongst each other to target tourists. So they are giving various benefits. Recently, Rajasthan government gave fantastic incentives to hotels. Incentive meaning they basically allowed fire license to be renewed for 3 years, which is a big cost and a big headache. And small thing like that will help ease of doing business for all the hoteliers in Rajasthan. Now that same kind of thing we are taking with us as a representation of the industry to other states also. So with all these things happening, we have to basically be practical and conservative and definitely beat our expectations which is being shown to you. So that is basically why I would say that this is the thing. But yes, we are definitely not here to achieve what we've shown you. To break that is our target.
And secondly, on the margins part, sir.
Margins, I think I just now mentioned to also the previous speaker that margins basically will come down based on our more leased properties opening up. Was that your question, sir?
No, I was asking, like in last quarter you mentioned 35% plus margin is kind of sustainable here on. But here we are speaking about coming down of the margins going ahead. So these things are not matching. So that's why I'm asking, like, why there is a change in stance as far as margins are concerned.
Because what has happened is that a lot of the new properties which are coming in are on a more lease. We expect that this margin percentage will change if our overall self-owned properties increase. But looking at the kind of opportunity we have, the pipeline that we have in our hotel pipeline of the hotels we're talking to as we speak, most of them are happening to be either revenue share or leasing and few management. If we were to get some more management or if our own properties open up, then we will definitely find that the margins will be more or less similar or high, or maybe go up also based on the kind of properties we are adding. So that is basically the reason. There are also certain cost impacts also which you could see in the things. So some of the cost impacts which are there, those cost impacts are also being mitigated by use of technology, making certain things more streamlined, reducing certain bureaucratic things like our processes enhancing through using of software, AI. So that also is happening. I must appreciate that our central team has been doing a lot of interesting things in terms of GST matching, because a lot of leakages would happen, with the GST at times, where if the vendor has not paid, that falls into our responsibility. So we lose out sometimes money there. Then making sure that our various payments go on time so that you comply with the rules. So these are all the things which also affect your margin, which they have been working on. So we feel that in the coming time, many of these things will be definitely not a problem.
Understood, sir. Thank you very much, sir. All the best for the future.
Thank you. Namaskar.
The next question is from the line of Ankur Kumar from Alpha Capital. Please go ahead.
Hello, sir. Thank you for taking my question. So my first question is QOQ drop in revenue. Our utilization hasn't dropped QOQ as in versus the December quarter, but revenue has dropped. So why has that happened?
So revenue has dropped, Smita. इसमें आपको कुछ इनका बोलना है?
Because third quarter is always strong and fourth quarter.
अच्छा वो वाला revenue. Sir, see what happens now. Always it is, if you see historically, the normal cycle, okay, is basically that you have a low first quarter. Okay, or let's say if I was to say a benchmark of 100, you will have, say, the first quarter would be 100, the second quarter tends to be 90, the third quarter becomes 130, 120, and then the next quarter becomes 110. Broadly, like this is a wave because of monsoon, firstly because of summer and holidays, based on the kind of mix we have. So in this season, our Shimla Manali right now is doing exceedingly well. It is full. Kids are going, families are going, but same thing you will find some corporate hotels of ours where there might be a dip because obviously बच्चे लोगों को लेके छुट्टी पे गए. So you find that different mix के हिसाब से the different products are active. So this is why the fourth quarter does not perform to the same level as the third quarter. This is historically the case. And unless and until some triggers are there, like some new hotel opening, which then have the sales which add, but then next year again you will find, once it naturalizes, that this would be the bell curve. This is a natural industry bell curve.
Actually, sir, page 13 has mentioned that occupancy rate is 65% both in Q3 and Q4, and ASP भी Q4 में improve हुए. So that is why I was wondering occupancy भी improved है, ASP भी improved है, average room rent भी improved है, so that is I was wondering.
That's a very good question. क्या है ना सर कि ये सिर्फ रूम की बात कर रहे हैं आप. There's F&B also, there are other incomes also, car hirings है, spa है, restaurant business है, banqueting का अलग है. So this is only based on room. But we have other incomes also which are there ना सर. डेकोरेशन का भी इनकम आता है, शादी होती है तो डेकोरेटर जो डेकोरेशन करता है, कभी कभी कोई होटलों में टाई अप रहता है तो दे पे अ डिपॉजिट फॉर ऑल दैट और दे पे सम मनी. सो ये सब के ओवरऑल रेवेन्यू है सर. सो इट्स अ वेरी गुड क्वेश्चन. ओनली रूम बेसिस पे यू आर राइट, बट वी आर ऑल्सो एडिंग एंड टॉकिंग अबाउट दी अदर इनकम्स दैट वे सर.
Got it, sir. And sir, would be as in last year we guided 100 to 110 crore type EBITDA, which we achieved, so great on that, sir. But this year, would you like to give some quantitative number on EBITDA?
I wouldn't want to give any particular guidance, sir, because it would not be like I said. We've been conservative in our top line also. It's very easy to deduct broadly what it would be, but our target this year would be to further, because as we speak the company is spending a lot on technology, some of the softwares and tools which we are looking at to enhance and reduce. One is turnaround time to enhance. Okay, we are working on a lot of TAT based initiatives to reduce wastage and to reduce the cost. So I think there should be some additional HO related efficiencies also coming in, so that would probably help us with our EBITDA and overall expenses, bringing down certain manpower in terms of automation. By 1st of May, we had targeted that the entire Kamat group, all the hotels will be entire digital. Your check-in, your check-out, your bills in the restaurant, all on your only email and WhatsApp. So that also has happened successfully in few of our hotels. The delay from 1st May has gone to, I think, I would say, 3rd week of May. But entire Kamat group will be entirely synced. Now what happens is not about only our ethos of saving paper, being a eco-friendly chain. That is one part. But also very important is that today, by doing these kind of initiatives, the tight integration happens for the accounting and finance. So your leakages chances go down, your mistakes from your employees, the chances go down. Guest is more happy because the records are there, and many, by the way, considering we have so many lakhs of Orchid Reward members, they get the points, they get the benefits, because of which repeat business happens. I mentioned last time also 32% of Kamat group is repeat business. So if 32% of our customers are coming again and again, they are coming because apart from loving our food and service, they also are getting additional perks, late checkout, early check-in if they are a reward member, points. So by doing this, our overall efficiency improves, our cost comes down, our compliance headache comes down. So these are all the kind of initiatives we are doing, which I think this coming year will show us some dividend.
Got it, sir. But sir, in your earlier comment to other party, when you said EBITDA margin will go down this year because of this new hotels and all.
Sir, that is marginally basically based on, again, it will go up also because when Orchid Pune finishes its renovation by this year, it will finish a bulk of its renovation. There will be a good upswing in the banquets because two big banquet halls are coming in Pune Orchid. One is a 6,000 square foot banquet hall, one is a 3,000 square foot banquet hall. So two banquet halls are also being added, apart from additional some rooms which we had also mentioned in the past. So all these also facilities will come. Now these are our self-owned properties. So considering that self-owned, their EBITDA will definitely help, either mitigate the new properties coming and its marginal drop, or it may help little increase temporarily. But as we keep growing and as more and more properties we take on lease or revenue share, you will find that there.
Sorry to interrupt. We have lost the connection on the management line. Please stay connected. The call. Ladies and gentlemen, the line for the management has been connected. Yes, sir, please go ahead.
Yes, sir, namaskar.
Yes, sir. Please go ahead.
Yeah, my apologies. The call dropped on the thing. So that's basically it. That it is basically that's how it will fall, but it will not fall rapidly. It will fall as we have more lease and revenue share. And reason we are more keen for lease and revenue share is because it allows us to operate the hotels as how we want. The top line, the bottom line, both are in our control, as compared to in management where at times it is not. It becomes a challenge with the owners. So that's basically is what our comfort factor lies. So that's basically it.
Sorry to interrupt, sir. The current participant has been disconnected. We will move on to the next question. It's from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Can you hear me?
Yes, namaskar.
Hi, sir. Sir, I have two questions. One is with respect to the debt part. So in the presentation, you mentioned that you will reduce the debt significantly. So my question is, the debt has come down from around 200 to like 200 to 105. How much debt reduction are we expecting this year, and what will be the with respect to the on the quarterly basis, how much this will be carry forward to the PAT?
So, firstly, let me share with you that even though our debt is around 105 CR, we today are sitting with cash in hand also, which is approximately 25 CR. That is the cash in hand reserves we have. And we are in a hurry to give this to the bank because we are sitting at a 10.5 interest rate, which will come down in the near future. Okay, for that already Smita ji and team are working, because a company like us with the kind of performance we are doing, we are eligible for much lower rates of interest, and they are doing the needful on that. But let's assume for a second, even that it is at 10.5 right now, even by me giving this 25 CR to the bank, all I am going to save for the year is a very limited amount of interest, which is only 2.5 CR for the whole year. Instead, we'd rather keep this money in hand, because there are some interesting things which we can always keep seeing. If tomorrow something else happens in the world, we should have money to be able to carry us. Now 25 CR can comfortably carry us for a good amount of time throughout the year. So we'd rather keep this cash and conserve it rather than. But effectively today we're already sitting at around, you can say, around 80 crore of only debt against an EBITDA today of around 105. Correct? Now EBITDA kitna tha? 102. Sorry. EBITDA? 102. Okay. So 102 tha kya isme? Okay. Anyway, so basically you can see that we are very, very comfortable in our position right now. So we are in no hurry to look at reducing the debt aggressively. In terms of what we are looking at is that in this coming year, this 105 on its own, based on our payouts and other things, will come down to around 75.
More than that.
And this is like timeline?
More than.
Hello?
Yeah, sorry.
I was asking the timeline.
Timeline is it's a routine payment as per the year, so it will go the year as per the daily payouts that we do. Whatever that every month we have to pay. So as per that it is there. So एक महीने में कितना देते स्मिता हम लोग?
5 crores principal.
Principal 5
along with the interest.
हर महीना जाता है ना. So that means we are talking about, but हम लोग उसको refi भी करेंगे ना. So we are looking at basically to ease up. So I think you can say, sir, that this 75 CR figure will be by the end of this year. It will come down every quarter by around 8 max 8 odd CR every quarter. 7-8 CR every quarter.
Sorry to interrupt. Mr. Raman, I would request you to please come back in the queue for further questions. Also, participants are requested to limit your questions to 2 per participant. The next question is from the line of Neeraj from White Pine Investment Management. Please go ahead.
Hi, can you hear me right now?
Yes, namaskar Neeraj ji. कैसे हैं?
Yeah, hi Vishal. Hi. Hey, wanted to check because this I'm not able to understand the maths. See, your revenues are in the quarter. If you do the total revenues of the company in the quarterly numbers, our revenues are 92 crores versus 110 crores on a sequential basis. In December quarter is 111 or so, and 92 and a half is around this, which is a fall of almost 19 crores or so. But if you look at the table that you have given in slide 14 of 22, your occupancy is same, your rates are higher. Right? If you take the overall consolidated occupancy, it's 65% each. If you look at the consolidated, I'm comparing with the December quarter, the rates are higher. 6,500 is Q425 and 6,377 is Q325. It's actually a higher number. Occupancy is 65% and 65% which is flat. So, and the revenues have fallen by almost, in percentage terms, almost 17%. So, can you explain this slightly, this number? Because if the room revenues are same and generally your F&B revenues are 60% or so of the revenues, a 17% fall is a quite meaningful fall. So either the data that you have shown is not real, or there's a significant fall in the F&B side. So just wanted to rack your brains on that.
Yeah. So you're right, Neeraj ji, that occupancy of the rooms has been better this quarter. Okay, there is no 65% of the F&B. F&B normally is around 35-40%. It goes up in quarter 3. It then drops because the saya dates, wedding dates, those may be lesser in the fourth quarter. So while the rooms have done well, there has been a dip in the F&B. Okay, and that is where the other incomes basically plays the holistic. So you are correct in your assessment. Occupancy of rooms and other things has been good. Okay, and but there has been a dip in other revenues, which is basically the thing. And in New Year, see, in December third quarter, you have Christmas, New Year. This year, Diwali was also there. Various other, our Hindu festivals and other festivals being there, we have done better in our F&B also. So that is definitely there, which is the case over here. And F&B, mota, depending on hotel, it changes anywhere between 25 to 40%, not 65%, sir. So it's a good question. I'll answer this actually same point to the gentleman beforehand also.
No, I know your answer, but the number is quite startling. That's the reason I answered. Okay, second question is, the number of rooms that is increasing is quite meaningful in percentage terms, right? And for next year. So, but in number of rooms that you're projecting to be increased from this quarter end to next year, and it's quite meaningful. Like, but the revenue potential that you're talking about is not as meaningful. So, is it because they are back-ended, or is it because they have a lower ARR? Or can you give some thoughts on that? Why you are forecasting only a revenue of 400 crores rather than a much higher potential now?
Very good question. I've opened the sheet also, so I can.
Yeah, so just reiterate the numbers: 1,800 going to 2,500 rooms, which is a jump of almost 40%. You're expecting a room rate to also go up, which is a jump of almost 15%. But revenue is 10% only. So, is it because you are expecting this to be an exit run rate, or is it that you are building too much of conservatism, or you are building lower F&B? Just some thoughts wanted from your side.
So probably takes time.
So example, abhi Hyderabad we expect to open by July. Okay, if it opens a little before then also that's fine. But it's a very room-centric property. It is, in fact, this 50 rooms may increase as we speak. It may go up a little. But again, what is going up is only room revenue. Over there's only one restaurant. There's no banqueting. But it's an excellent location in the heart of high-tech city. So we expect only room income to come here. Here, in fact, F&B may be not even 15% of the revenue. When we talk about Rishikesh now, so Hyderabad opening in July, it will start doing well from the month of July itself, because Hyderabad is that kind of market. But it has lost the first 3 months. So even if I have expected to do a full year revenue of say 100, but it is actually only going to do 75 rupees, considering that the first quarter is gone. Similarly, in Rishikesh, the reason we are targeting July to open is because the Dham starts, the Dham Yatras and other things which are there. But it's a 54-room property. It's a resort kind of destination. So again, opening from the month of July. So I may not get the full year benefit. I'm only going to get 3 quarters ka benefit. Bhavnagar is only 61 rooms but opening in October. So we are only going to get mota 5 months benefit or 6 months benefit or max to max 5, because first 1 month goes in setup. Same way Dehradun we expect it to be opening by suppose December, which is our target. Then we'll only get 2-3 months of the year ending. Gwalior also is expected to open by December. We will only get 2-3 years of the ending, but Gwalior is a ulta case. Gwalior, though it's a 50-room hotel, it has huge banqueting and very good potential for banqueting. So there, the F&B to room ratio may end up being 50-50, if not 60-40. So these are the hotels which, as of now, we are opening this year, and as you can see, we are unable to take the full advantage of all the hotel being open in this year. So that is basically why we've kept our outlook conservative. I do agree it is conservative, but I'd rather be conservative and beat my expectation than to unnecessarily just say something, because unfortunately these hotels are not opening full. Now see, Chandigarh is opened at the right time of April. So this 11 months, next 10 to 11 months which I have in my hand will give me some meaningful and reasonable outcome in terms of the overall sales. So that will definitely also help adding in terms of our targets.
Thank you. I would request Neeraj to please come back in the queue for further questions. The next question is from the line of Naitak from NV Alpha Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, in terms of capex, what would be the requirement for this year? I believe we are doing some renovation in the Pune hotel. So what would be your capex you will require to do the same, and will some keys remain shut while we are renovating the Pune hotel?
Yes, so basically just like we have, Pune work going on, it is from the internal accruals only. We are not using any outside money. We are using from internal accruals, and whatever is generated by the company, that even last year the work which has been going on, and yet the company has a corpus of 25 CR in its hand. So we will be using our cash very efficiently in terms of doing both, increasing our property value in terms of aspiration and in terms of sale, while also having prudent cash flow management and creating these reserves also, and reducing the debt altogether. So I think the Smitaji and team are doing a very good job in that regard. So it's all from internal accruals, and it will be completed. Again, it's in a phased manner, so it will continue over the next almost would say 18 months. Because Pune Orchid is a very large hotel. It's a 410-room hotel, which eventually will become approximately 460 rooms. So we intend that all the rooms will be renovated based on blocks. So the hotel will always have not less than 350 rooms for sale. So that's how we intend to do the renovation. So that, I think, will be the reason why the sales also will continue to support our overall, and there is no dip in our revenue. Or maybe there will be increase also, because the banquet halls also will come. 2 banquet halls, like I mentioned before, will also come into the picture.
Right. But any number you would want to give in terms of how much you are going to be spending in this year, in the next 18 months, say, for the same, for whatever renovation that is left?
Around 40 crore rupees is what we expect the thing to be.
Right.
Over
So
the
next right. Got it, sir. So my next question is, over the last year, both Orchid brand and Era brand has seen, occupancy rate drop year over year. So, sir, what is the reason for that?
So what happens now, when we talk about Orchid, unfortunately, it also includes some of the hotels which are, like example, Jamnagar. So in Jamnagar, being an Orchid brand, and this being a brand Orchid, it does not reflect the true occupancy or the true ARR of the Orchid, like say Mumbai or Pune, where there has been an increase in the ARR and the occupancy. So last year basically we did 6,069. This year we did 6,900 for the Orchid. ERA did last time 5,600. This year it is done 5,900. So it's not dropped, it's gone up, but it still does not reflect the real ARR of ERA Mumbai. Real ARR of ERA Mumbai is much north of this. Yeah, 6,500 plus, and Orchid Mumbai is 7,200 plus. So it's not a true reflection of the performance of individual hotels, but as a brand. Now what happens, ERA again, Sambhaji Nagar, where they are selling at around 3,500 to 4,000 rupees, brings the overall ERA brand ka ADR down. So that's basically what the thing is. So ARR has gone up from last year, last quarter, in the quarter to quarter, but this is not what you call. But you're right, that it does not reflect the true operational improvements in the unit level, like Orchid Mumbai.
Thank you. The next question is from the line of Gitesh from Mindrava Global Capital. Please go ahead.
Hi, sir. Am I audible?
Yes, sir. Namaskar.
Yes, sir. So, sir, I have two questions. Given the merger of Trio Resort, that is in Palagar, and the acquisition of the Chandni Hospitality, would the board quantify the revenue contribution from the Palagar luxury resort?
So you're talking about the Chandni Hospitality. I'm sorry, I got confused when you said Chandni Hospitality and what? Can you please repeat your question?
Sir, given the merger of the Trio Resort, which is in Palagar, and the acquisition of Chandni Hospitality. Could you quantify the revenue contribution that the property makes?
So, Chandni Hospitality has the Chandigarh Orchid Hotel. Okay, we expect that in its mature phase, it should do anywhere between around 30 CR top line. It should do, okay, which is the thing. But this is open just now. So this year we had be conservative to say that it would do about maybe anywhere between 20 and 22 CR. Okay, for this year is what we are expecting. But that's our conservative take on, a practical take on Chandigarh Orchid. And Palghar basically is very interesting that we basically had this property which we were looking at acquiring and doing, and unfortunately at that time we were very poor in communicating the benefits and the things of this entire, but today it has turned out to be a boon because it is right near the Vadhavan port. There is an airport coming near our property. Whatever valuation and value we had at that particular time, it has way surpassed that entire piece of, it's a 16-acre property at Palghar, and now its property value has shot up and its demand also has shot up. So the company has decided not to do anything right now to it. One is that is a pending a merger. So pending the merger because we are awaiting SEBI approval. Correct, na, Smita ji? Yes. So we are awaiting the SEBI approval. Once the SEBI approval comes, okay, and then I think then uske baad NCLT approval, and that will be the process, and then the members approval. So based on this fulfilling, the company will have at those valuations a massive chunk of land which it intends to exploit in not just in a resort manner but even from the real estate perspective, because we have been approached by various people to look at developing, because that Palghar and that entire Manor, Palghar with Vadhavan area is right now extremely hot. So we are just waiting for certain things to happen. Once this all happens, then accordingly a right kind of good name partner, there are various who are interested, would be associated, and we would look at a mix of 16 acres being a breakup between a fantastic resort, Orchid Hotel, along with commercial residential development also, and it's a very scenic spot right on the main highway. So we are quite keen that once this statutory but the statutory processes, once this get complete, because it has been quite long, SEBI has been taking its due time on many things. So once that completes, then we will be able to monetize this, and we are very happy to see that its value has literally doubled, tripled because of the airport and other things and all coming over there. So I'm very happy for us all as Kamat Hotels shareholders. But at that time, I think we had not fully explained properly the overall benefits that are there. So thank you for asking that question.
That's great news, sir. Sir, I had one more question. Could you also provide some clarity on the resolution, some sort of timeline concerning the Enforcement Directorate investigation that is currently going on, and when we can expect the 500 lakhs to be released, considering that we have already made an exceptional income of 160 lakhs just on the accrued interest? What can we expect going forward from here?
So that's a very nice question. Let me share with you, and I'll tell you in very brief for all my listeners and for them to understand what is this ED matter. In 2013, when the company was in financial challenges, we had a loan to be paid to Punjab National Bank. So the company at that time decided that let us sell our Bhubaneswar asset. It is worth 30 CR. Loan of Punjab National Bank was around 21 CR, and the balance amount, which was around 8 odd 20 to 21, whatever, 8 odd CR, we would use that to settle other banks in Kamat hotels and come out of the things as conventional logic. So when they did this, that time they had floated various interest, obviously through brokers and others and all. That time there was a company called as Microfinance and Leasing who came to us. They did a genuine transaction. We did a genuine transaction where there was a genuine sale to be done. And just as in any genuine sale, you will take a token. So the company had taken a token of 3 crore rupees, based on which in 2014 an agreement was entered. An agreement was entered with various timelines and hurdles to be done. One of the hurdles being getting approval from the government of Orissa. That also the company fulfilled its obligations. But in 2014, 2015, during that time, we were not aware that who these people, as most of India has dealt with various kinds of, these kinds of chit fund kind of people who have, done legitimate and illegitimate transactions. Ours is a clean, clear, legitimate transaction. That is why we were able to get this order. The order is very simple, that earlier, because of certain actions of the ED, a lot of our money had to be deposited in the court. Finally, the court has said, no, you do one thing, you keep only 5 because their demand is only 3 crore rupees, but 15 crore rupees approximately of our money had got stuck because of the ED matters. Now, out of this 15 crore rupees, the court said, yes, if they are asking for 3, they are entitled for 3 crore. So you give them 3 crore. Along with this, keep this 2 crore rupee extra interest with them. Okay, so that they have also not objected, they have also accepted, and the balance money will come back to Kamat Hotels India Limited. This said and done, the court also has identified, as have we also, and we have our rights to further claim this 5 crore back based on the guidance, advice, and the actions of our advocates and other legal team. So the company, while it has currently deposited this, or not deposited, it will deposit once we get the money from the court. It is right now all deposited in court. Within the next week, 10 days, we should get this entire 16.5 crore rupees, broadly, 16.5 crore rupees back from the court. Out of that 16.5 crore rupees, 5 crore will be deposited with the ED, with considering the full rights to demand this also back, which the company will continue to do, and the balance 11 odd crore rupees will be with the company to be utilized as it deemed fit. So that is broadly this ED matter. Okay, I'm very happy that to tell you that we have gone through our trial by fire and we have come out clean that yes, this has been a business legitimate transaction, but as in any ED matter, it takes time to resolve. Okay, so and we are intending on that. So I hope this explains you the whole picture.
Thank you. The next question is from the line of Krisha Kansara from Molecule Ventures. Please go ahead.
Hello.
Namaskar.
Am I audible, sir? Yeah.
Yes, Krisha, you are audible.
So my first question was already asked by a participant, but I just wanted to confirm the capex amount. So you mentioned that you will spend 40 crores for renovating two properties, right? One is the Goa property and one is OHPPL.
No, this is only Goa. This is only OHPPL. This is only OHPPL. Okay. Not Goa has been already done and completed, and it is operational also. It has started operations of late. Huh?
Right. So what amount did we spend in the Goa properties renovation?
14 CR.
Okay, 14 CR. Okay. And Sir, you mentioned that our merger is currently, we are awaiting SEBI approval, and then, of course, we'll go to NCLT approval and etc. So could you put a timeline to it, by when will we be able to conclude the merger? And then once the merger is concluded, what are our expansion plans on the land that we have in Sabarwadi?
I have already answered this just now before, madam. So I don't want to take all the participants' time again. I cannot give any timeline because it is only based on SEBI approval. SEBI has been sitting on it. Once they give an approval, we will be in a position to expedite all the other things.
Okay. Sure. Thank you.
The next question is from the line of Randeep Kapoor from Investire Investments. Please go ahead.
Hi. Thanks for the opportunity. Sir, my question is specifically for these 4 new hotels which the company holds. One is Ayodhya, Noida, Jamnagar, and Aurangabad. How did they perform in FY22 in terms of ARR and occupancy?
That's a really good question. It did very well. I'll start with Ayodhya. Ayodhya did exceedingly well, especially because of the Kumbh Mela. Kumbh Mela time, it did exceptional ARR, fluctuating anywhere between 10 to 14,000 rupees with an occupancy of 90% during the Kumbh Mela. So that has done exceedingly well, and even the people appreciated the food in our hotel. So it is one of our top performing hotels in the market. It is it is arguably between number 1 and 2 between us and another foreign brand. So that's how well ERA has been able to do for itself in Ayodhya. Which other hotel did you ask, sir?
It's Noida, Jamnagar, and Aurangabad.
So Noida has been basically, it started off slow. It's then picked up, did exceedingly well, because especially in the fourth quarter, there were various events in Noida which happened, like the Auto Expo and other expos, and because of our strategic location opposite Google and opposite Cognizant and other such corporates, we are basically getting a lot of good movement which has started now. So it has also been doing exceedingly well. The ARR over there fluctuates anywhere between 4.5 to up to 7.5 also. Or sometimes it anomaly it does even more. And this has been our first sequence, so we did not know many things which we have learned now, and next year we expect it to do much better. In fact, right now it's only operating with 34 rooms, but the additional 26 rooms will come. Once that comes as a 60-room hotel, it will do even better. So we are awaiting the second phase work, which is already going on as we speak. So yeah, that's Noida. Then Sambhaji Nagar has done really well in terms of the rooms. While it was a strategic move, it was a strategic call. We are very keen that we are already having a strength in Mumbai, Pune. A lot of the factories, Skoda and various other companies, MNCs, they have a setup in Pune and in Sambhaji Nagar, or they have a setup in Sambhaji Nagar and Mumbai. And we wanted to basically, because of our network, we wanted to be in Sambhaji Nagar, so we took it, even though 33 rooms is a very small property for us. But I'm very happy to tell you it's doing very well, especially during season. Here also the ARR fluctuates anywhere between 3.5 to 6.5, depending on the season. Because Aurangabad, especially during summers, the rates fall because the low people go less. It's extremely hot. But in the winters and during wedding times, again it has a very good pickup and a very good boom. So that's also doing well. And which one else, sir, you wanted to know?
Jamnagar is the last one out.
Jamnagar started off slowly, but then thanks to certain nice events which happened over there, one of the biggest weddings in the country or maybe the world that has happened, that helped us a lot over there to do well. But now we find that there's a good, stable, consistent market which has developed, because it is by far the best product in Jamnagar, and it is doing in terms of the client profile we're getting is very different from what other hotels have been getting. So it is doing well. But yes, it's a tough ARR market. In fact, it is the kind of ARR which has brought down our overall Orchid brand ARR. That fluctuates anywhere between 3.5 and 5.5, 4.5, 5.5. It is a tough market. But we think that once we are soon looking at certain opportunities in Dwarka, and Rajkot. And once this Dwarka Rajkot happens, this will be a natural tour circuit which is currently already there in place. So that will further help our overall business in Jamnagar also.
Okay, sir. Thank you so much, sir.
I think, moderator, in interest of time, we can take 2 more questions and then we can wind up if you don't mind, unless anyone else has missing it.
Okay, sir. The next question is from the line of Siddhant from RV Investments. Please go ahead.
Good evening, sir. Am I audible?
Yeah.
So, sir, given the occupancy ratio, current one, do you anticipate this level of performance to be sustainable over the next year?
What is sustainable, sir? Sorry, your voice was cracking.
So, given the current occupancy ratio, do you anticipate this level of performance to be sustainable over the next year?
Yes, sir. We definitely hope that we don't just sustain this, but...
Okay, sir. That was my question. Thank you very much.
Please don't stop the moderation, sir. Moderator? Hello, moderator?
Yes, sir.
Yeah, we have, I think, around 6 people still left for questions. So let's finish all the 6, please, in respect for all who have been patient till now. Let's finish all these 6 who are currently there. Okay?
Okay, sir.
Yeah,
the next question is from the line of Kunjan Gandhara from Tyco Ventures. Please go ahead.
Thank you, sir, for taking the question. So I have an accounting related question. In December 24 quarter, revenue which was around 110 crores, was it, did it have any exceptional item? Because the notes mentioned that some 8-9 crores was due to some reversal of property tax dispute with BMC, which was recognized as operating income. So was it like our actual revenue was 102 odd?
Yeah, so basically, as already in the entire city of Mumbai, there are certain challenges happening, which is matter is well known and in the Supreme Court also, okay, whereby there was a way of calculating tax between what I believe to be called as capital gain system and the old method. Let's just call it an old and new method for easy parlance. So there was a challenge between the old and the new, and there was a gap. So finally, I think when our board decided that we are doing all these kind of cleanups, making everything, we don't want to unnecessarily pay penalties and other things. And based on that, we basically finished off whatever pending challenges were there in the property tax and other things also. So we are very happy to tell you that ever since that cleanup and the NOC being getting from the BMC and all, we have no dues left with the BMC, which is a very good thing for us. In both reputation-wise, property safety-wise, in all wise. So the company has used a lot of its energy and effort in the last 1.5 years to clean up all these kinds of miscellaneous things also. So we don't want to keep any, that's why this year when the balance sheet comes out, it will be much thinner than before, because so many of these kind of earlier matters which were mentioned are now not there. This is basically what used to be mentioned in the earlier balance sheets also, that as per capital gain, this, that, whatever, that it's whatever capital system or whatever they call it. So basically, this was the challenge. So this is there in the whole city of Mumbai, but we decided to resolve it with the BMC as each one can as a citizen. So thank you. Thank you.
Kunjan, does that answer your question?
Yes, it does. Thank you.
Thank you, sir.
The next question is a follow-up question. It's from the line of Aman Soni from Invest Analytics Advisory. Please go ahead. Aman Soni, your line has been unmuted. Please go ahead with your question.
My question is already answered.
Thank you, sir. Thank you. Appreciate it.
The next question is from the line of Guru Darshan from Kitara Capital. Please go ahead.
Yes, sir. Thank you. Sir, just wanted to understand, for the properties that are on lease or any of them are expiring or coming up for renewal this year, are we planning to renew them, or are we looking to give up any of these existing properties?
No, there is no properties for renewal or anything like that per se. We all have, all our are long lease or long-term tie-ups, so they have a long time to end. So, thank you, sir.
All right. Thank you, sir. Thank you.
Thank you, sir.
Thank you.
Moderator, Mr. Galt will be the last person, as we already discussed. Mr. Galt would be the last
Okay, sir.
person.
Okay.
Yeah.
The next question is from the line of Neeraj from White Pine Investments. Please go ahead.
Thank you for the follow-up. I had one question.
Yes, sir.
You said about the conservatism in forecasting. Appreciate that. But since your lot of revenue is going to coming from the room side, rather than F&B, and room have operating leverage both sides, right? So do you see the EBITDA margin for the company improving or flattish or falling? Just some guidance from you would be useful.
So definitely the EBITDA in terms of volume, like today we are at 102, 100, कितना है Smita? 100? ये साल का हमारा कितना हुआ अभी?
102.
102 ना? So definitely this 102 figure will go north because Chandigarh hotel will contribute a good portion to this. Then Rishikesh, even if it will not be doing its full potential, it will add something more to the EBITDA bottom line. Similarly, other hotels like Hyderabad, this will also participate in this. So I think that definitely we can see this EBITDA line of ours improving considerably in the coming year. And yeah, that it will do. It will definitely add.
Okay, great. Thank you.
Thank you, sir.
The next question is from the line of Rakesh Banerjee from RAP Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. My question is, let's say we assume that none of our new properties are coming online this year. Now, given that you have given a guidance that our ARR will be improving from 6,500 to 7,500, which is almost around 15%. And at the same time, the occupancy ratio is for the existing property on year-on-year basis has been only 55%. Now, even if there is no new property occupancy we consider, even then also from the existing property, as we know that as and when the hotel matures, the occupancy rate improves. So let's say if we can improve from 55% to 60%, just 5% over here, and the ARR guidance that you have given is around 15% over the last year, so even then also there should be 20% growth in the revenue. So I just wanted to understand what made you, like, even if we do not consider the new properties that is coming online, even then also there should be 20% kind of growth as per our understanding. Wanted to know your take on this.
Yes, sir. So I can explain you. Let's understand, sir, that average room rate as shared in slide number, what is this number slide? 10. And which you are referring to. This is an increase in room rate. It does not necessarily reflect for the entire group, sir. The reason being that today with the Rishikesh coming and if it is going to do an 18,000 rupees ARR, even though it is a small base of 58 rooms, the ARR will go up, na sir? So what we are looking at with Chandigarh, where the Chandigarh also ARR market, we are expecting a very healthy ARR. We have premium properties coming in this year. Dehradun also, when it comes, will be a premium ARR in the sense that it will be $100 bracket, which will be $90 to $120 के बीच में, which will मोटा 8,000, 10,000. So when we are looking at a ARR increase, it is not consummate necessarily to the entire thing. I think we, Smita, should make this very clear because see, we are on one hand talking about different brands. We should make this clear. Orchid का हम लोग जो बोल रहे हैं, ये group level ARR तो हमारा वैसे भी 6.5 नहीं है. So I think we have not correctly put it. I think it's a very good question you asked, sir, and made me realize this, what we need to present better. The average room rate will go up, definitely go up, sir, for the brands, but it is not across all the 2,000 plus keys that is there. Those will go up based on each. Like example, some may go up 5%, some may go up 8%, some may go up 10%, but the percentage is not directly mentioned by you on their denominating factor. So it's a very good question. And I think, sir, we will correct this part and make it more specific. Next is me.
That's one. And second part is, sir, like now we have reduced the debt substantially. And with our kind of clean balance sheet, we are in a position to negotiate with the bank for a cheaper credit cost also. My question is, why we are trying to be completely debt free rather than why not if we are sustainably making 20% ROCE or return on equity, and if we are getting loan at 10%, for example, we are making 10% alpha in the business. So instead of using that debt judiciously, why we are targeting to be completely debt free?
So, sir, we are not targeting to be debt-free, honestly speaking. We are looking at that we will eventually come down to broadly 80 crore rupee debt, have two good banks with us to support us. Today, we are grateful to Axis Bank that they have implicit faith in us. We are grateful to all our past lenders who we have dealt with. And though we have a problem with ARC and others with them, including SBI Bank, all these people, today they have a strong faith in us because we paid them also, we came back out of this also, and they respect us as a genuine business gone down and bounced back. So I agree with you, sir. Our intention is not to be fully debt-free, but we, as you rightly also said, that we must bring our interest, which is today 10.5, that to target around 9-ish or maybe sub-9 if possible, and have two good, strong bankers to be able to support us as for our expansion. Ultimately, sir, with so much cash being generated and conserved, there is obviously a plan in the future for us to look at. But those are for the future things. Today, the company wants to just keep itself neat, clean, nimble, so that it can take advantage of any opportunities which may come in the future.
Fine. Sir, another last question is that on year-on-year basis, if we see our occupancy ratio has remained almost same. It might have happened that we have added couple of key rooms. I mean, that is why the occupancy, even if on percentage term is remaining same, but on absolute term it has increased. But going forward, let's say all our existing property, I'm not talking about the new properties, but for our existing property, what sort of occupancy increment we are looking for and what are the steps that we are taking for that?
So, sir, hotel to hotel, like example, Mumbai hotels are in the high 70s, on a YTD basis. But then there are certain which are at a little lower. Like you rightly correctly said, many a times what happens, sir, is that the new properties which come in, they bring down the overall ARR of the overall hotel. So, it's basically just about being consistently at it, and as these new hotels will become mature, the overall scenario will improve. Thank you, sir.
Okay, thank you so much.
Thank you.
So I think we have finished all the things, sir. Only Mr. Gault left now.
Sir, there's two more.
Okay, let us. One is Mr. Gault and Mr. Raman. Apart from these two, then we will end it.
Okay, sir. The next question is from Raman from Sequent Investments. Please go ahead.
Hello, can you hear me?
Namaskar.
Hello.
Yes, namaskar.
So, I just have one question with respect to the Rishikesh property as well as the Hyderabad property, which will be opened in first half of this year. So, how much incremental revenue will they be adding to the company's consolidated level revenue this year? And what is the in the optimum use case, what is the incremental revenue from those two properties?
So, sir, we think that it should do around 12 CR for us if all things go well.
Okay.
So that basically would be the broad this thing.
12 CR in this year.
Broadly, yeah. Around, you can say plus minus 11 to 13.
Both the properties inclusive, right?
Both, no, sir. Haridwar you asked, na? Rishikesh you asked, na?
Rishikesh and Hyderabad. Yeah, so both together will do 12 CR, right?
Correct. Both will what, sir?
Okay. Both together will do 12 CR, right? Or individually Rishikesh will do 12 CR and Hyderabad will do 12 CR?
No, Hyderabad will do different, sir. This I have told you is only Rishikesh. Hyderabad, one second. Hyderabad should do somewhere around 7 to 8 CR. 7 CR you can take. 7.
Okay. And sir, the 16-acre property in Palghar, what is the current land value of that property?
Sir, right now the land value is substantially high. Let certain things develop, sir. We will sing it, because neither the company, it's right now in the midst of a merger, so it's not fair for me to speculate on this. Definitely, it's not correct to speak about its value. But let's just say that whatever it is, it's been considerably high and going up further. Now with the other also port coming.
Okay, thank you, sir.
Thank you, sir. Thank you.
The last question is from the line of Gold, an individual investor. Please go ahead.
Hello.
Yes.
Hello. Hello, am I audible?
Yes, sir, you are.
Yes, sir. So my question is regarding dividend payout. So, when do we plan to enter the dividend-paying list of companies, given that the stocks are re-rated, once we start paying dividend? And my name is Gunit from Counter-Cyclical PMS.
Acha, namaskar, Gunit. Thank you for being the last caller of the day. Regarding dividend, I think that's something which we will definitely put this point to the board, because this is something more the board will decide. I cannot speculate on that, but so definitely dividend one thing, and that will definitely help us. If you're saying re-rate, then that's a nice thing. What other part was there of your question?
Sir, my second question would be that we have about 16 hotels operational currently. So, this question has like 2-3 sub-questions. So, how long does it take for a hotel to stabilize, and what kind of optimal occupancy do we expect per hotel for the rooms? Number one. And number two, the currently operational hotels, if we consider them to be stabilized, what kind of revenue potential at that optimal utilization do we expect from optimal occupancy do we expect from the current operational hotels? We also have about 7 to 8 hotels coming up. So, I would like to understand the revenue potential from those as well.
Yeah. So, sir, a lot of this, what you asked for, is already given in the presentation which we've shared. A lot of these details are there in that, which is already been given. So that will help answer at least 70% of your queries. One of the things which you asked about stability, I'll just tell you that generally, sir, it takes a few months, anywhere between 2 to 4 months for the hotel to stabilize, bring up certain things, come into play. That it does take some time. It depends again on location. Hyderabad will happen in not more than a month, whereas Rishikesh may take 4 months. We don't know, basically based on various factors. But that's I'm giving you an industry general thumb rule. And second is 65% is generally what the industry looks at in terms of a reasonable occupancy for a year to date, depending on again property to property, city to city. A city like Mumbai should be in the 70s with a very good ARR, or with a considerably compromised ARR, but then in the 80s in occupancy. Same way for Delhi. So it's a very subjective and a very hotel thing. Rest of the things, sir, like I mentioned, is there in our presentation. So with that, I'd like to thank you all for participating. I'm really grateful to the numerous people who asked the questions. Some of them patiently came back also in line. I really thank you once again, and namaskar everyone.
Thank you. On behalf of Kamat Hotels India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.